moment while I connect to Facebook. We will be getting started shortly. Hope everybody's doing great. And I think we should be live on Facebook. Hi everybody, welcome to another video from the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. Hope you're doing well, hope you're enjoying the holiday weekend, and we're gonna go ahead and get started. First, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description below the video. Without further ado, let's turn to the charts and get started. We're basically gonna take a look at the market and then go over some amazing swing ideas for next week. Before I start, also I want to say, if you find benefit in today's video and you'd like to help support our channel, please be sure to hit the like button. That helps us out quite a bit. And if you have any questions for us, email customer service info@t3live.com, info@t3live.com. So last week I said the market is turned bearish. We have a sell set up on the weekly chart of the Qs that I didn't think was gonna fail. Fail means, you know, to go back above it. If we had gone back up, that would have failed. That would have constituted failure. So, but I said we still have a rising 20, so I don't think we're gonna, like, you know, fall apart. We didn't. We dropped one day, and then I don't know, was that Monday? Tuesday maybe? And then we went sideways the entire week, which is wonderful because that allows the 20 MA on the daily chart, that blue line, to start curling and pointing down, which would then, if we break under now, which would lead to a sustainable sell-off. Not only that, but now we have a weekly 1, 2, 3 that one can take advantage of, okay? So that's actually going to be an idea for next week. It's on the list. Here it is. It's the SQQQ. If one doesn't want to short, tie up your buying power with $338 ETF, can use the SQQQ also as a base breakout long. Stop right here, and then target 1 would be $50. Target 2 to the moon. Who knows? Because I think there's going to be a recession. That's why I said to the moon. But we'll get there in a minute. Let's take a look at the SPY real quick. The SPY's same picture too. Stronger than the Qs for sure. Holding up better than the Qs, but similar picture. And then the IWM, which is the Russell 2000, actually has a better 1, 2, 3 on the weekly chart. So short right here, stop right here, and then target, go on vacation, because in my opinion we're gonna have a prolonged sell-off. That's what I think, which will eventually probably lead to a recession. That's my opinion. All right, so that's what I think we're gonna be bearish next week and going forward probably, and I like the market short. Now on to the ideas, some of which will be independent from the market, or, you know, defensive, like pharmaceuticals, medical stuff. People still need their medicine no matter what, whether we're in a recession or a bullish market. Consumer defensive, food and beverage, gold, oil, that sort of thing, okay? And we have a bullish list, and we also have a long bearish list to go over. If you'd like to, instead of having to type it up, if you'd like to just copy and paste it, I already did that for you in the description of the video. So just go to the description and then copy it into your platform, and let's go over it together. First, the airlines in general look really terrific long term. Now, you might be thinking, well, airlines, recession, though that's not, you know, airlines is not a recession proof sector like utilities would be, like, you know, again, food and beverage stocks should be. And you would be right if you said that, but they look higher. I mean, they look good. So AAL, DELL is probably the strongest. I had a call on it on Friday. It gapped above the entry a little bit. So DAL, UAL, I mean, they will all work or all fail. One can also look at the JETS, which is the tracking ETF for the airlines industry. Okay, so I like them. I have AAL, but really I don't have much preference, whether it's the AAL, the DAL, the LUV. The only one that I don't like is the JetBlue. So that's the only one that I don't like. Everything else is fine. And SAVE is obviously in the process of being bought out. So I wouldn't do SAVE, wouldn't do JetBlue, but any other airline is fine. Okay, gold remains bullish. I have a couple of gold stocks. I think I do. And gold still looks good. AEM looks good over the base. I would give it all the way down to here in terms of the stop under the 20, so that you're riding that 20 MA and you don't get shaken out of it by using a tight stop. That's my suggestion. The same can be done with the GDX. It's in a nice uptrend nugget. It's the triple leveraged ETF for GDX. Okay. GLD, which is also on the list, I believe. Maybe not. Looks good too over the SPARS high, which is 185. Stop would be 182.88. Target 192 or so, the prior high. So gold looks good still. Pharmaceutical, I think this is pharmaceutical, therapeutics. It looks interesting. AKBA, it's a penny stock. I like it over 55 cents. Stop under 47, and target is about 78 cents on the AKBA. Okay. CTRM. This is, I think, a tanker, so oil shipping. I like it. It already triggered. Disclaimer, I already have a position because it already triggered. But I still like it if it can take out Friday's high, stop under 206. Long. It's just so bullish. Look at the hourly chart. So bullish. Okay, but as a disclaimer, I already have it. DNN for a base breakout. So if it can take out, I think $1.80, $1.79, $1.83, over $1.83, tightest stop would be $1.67. That would be the tightest. Widest, which would be safer, $1.53 on the DNN. DOGZ is the only Chinese stock that looks completely different than the rest of the Chinese market and looks really bullish. There's something special and unique about it. I don't know what it is, but I like it over 630, 631, I think. Long, stop right here. I don't know what the stop should be, 560, so just a couple cents below that. And then target would be up here, around, as you can see, $9. So it looks nice. It's different than all the other Chinese stocks that I'm aware of. Another Chinese stock, I think, that looks higher. Oh, this one is a little too thin, I believe. Yeah, I'm not going to even talk about it. It's very, very thin. Looks higher to $4. ERX is triple leveraged ETF for energy, like higher also, just like the GDX up here, and I wouldn't use a tight stop. I would just give it to here under the 20 MA. This way one can ride the whole uptrend without getting shaken out. Okay, so I like the ERX long as well. I had a call on it, just as a disclaimer, triggered already on Friday, but it's still not too late. ESPR, biotech, it looks higher as a breakout. Long would be over 610. Stop under 522, or really wide stop would be under 450, 459. Target about $9 up here, almost $9. Okay, FLR also triggered on Friday, but not late at all. That's why I included it in the list. The things that have already triggered, I don't usually include because they're already gone. I'll give you an example. CRK. I called it on this day. So if you're in, it's a mega home run. It should be up 8 hours, basically. I never mention it in these weekly videos because it's already gone. But FLR triggered on Friday, but it's not late at all. I still like it higher. This is engineering and construction. Check it out. FLR and KBR. What the heck? They really look higher. It's, real estate related. Long stop. It triggered already. I didn't get it though on Friday because I wasn't aware of it. I just became aware of it when I scanned this weekend is when I found it. But I like the FLR. That's not late. And if we look at the monthly, looks pretty good. You look at the weekly, looks really good too. So I like FLR. I also like KBR, but I'm waiting for a 1, 2, 3 to form. GD defense or defense stocks look pretty darn good as well. Over the base on General Dynamics, stop right here. And then I wouldn't even take anything up there. I would just hold long term. So there's GD, but there's also NOC. That looks similar as well. GD has a tighter base, so I like the GD more. What about Raytheon, RTX? That's really bullish also, but doesn't have that tight base that GD has. And then Boeing is also defensive, but doesn't look good. I don't know what else. So check out the defense stocks, or the defense stocks, I should say. NOV, oil. A lot of those stocks are too far gone. This one isn't. So I like it long over Friday's high, whatever it is. I can check for you, but you don't need me to check for you. Just go over Friday's high. That's 2080. So above it would be the entry. 2081, 82, 83, whatever you want. I usually give it a couple cents personally, because I don't like to get tagged by 1 cent. A lot of times that's what happens. Like the RLX, I had a call on it on Friday at 216, just FYI. It got to, and then the high of that bar was 214. If I had put my order in the system at 215, I would have gotten tagged. And then notice how it came back in to 206. So closed down 9 cents after it already, technically speaking, triggered. But that's why I don't put my order in the system exactly 1 penny above. Rarely do I do that. So on the NOV, I see that the bar's high is 2080. So I normally would almost never put my entry in the system at 2081. Okay, I would give it a little bit more room. At any rate, like it higher over the base, stop under it. And again, a lot of the oil stocks are way gone, too far gone. This one isn't. RLX, that was the next one on the list. I like it. It's a Chinese stock, looks good to the prior high. Not the best, but not horrible either. I like it. RLX. SQQ, we already talked about the market. I like the market lower. SQQ is the triple leveraged inverse ETF of the Qs. And the reason why I'm mentioning it is because the Qs is a $340 ETF. So it's a margin hog. It uses up a lot of margin, or buying power, I should say. So SQQ will give you bigger bang for your buck, but it's also a $40 ETF, right? Check out the target, TGT, weekly 123, monthly buy setup. It's a pullback to the rising 20, and an hourly breakout. That's not bad. I like it. Already triggered on Friday over that base, but not too late over 238.20 with a stop. I would put it under 228.91, just even though it would be a big stop, but just safer. And if it pops again, then one can perhaps raise the stop to 233. But initially I would size it to this bar's low, because the larger the stop, the smaller the share size. There's a formula for share sizing. The formula is share size equals risk unit, or risk amount, however much you want to risk on the play, divided by the entry price minus the stop price, in parentheses. So again, share size equals risk amount, $500, $1,000, $2,000, however much you want to risk on the play. $100, right? Doesn't matter. Whatever it is that you like to risk per play. So share size equals risk amount divided by, open parentheses, entry price minus stop price, close parentheses. So your size really depends on your share size. Depends on the size of the stop and your risk per trade, your risk amount, or your risk unit. TMUS, already an open position in the newsletter. It was called twice. One time was right here, the other time was over here. Already trailed out of half. And then now it's setting up for another base breakout over the base right here. Stop right here. I like it. To the all-time high. Now, why would T-Mobile and AT&T and Verizon and all these telecom stocks do well in a recession? Because it's not that the companies will do better in a recession than in a bullish market, but it's just that a lot of money might pour into those stocks, since people will still need their phones, okay, in a recession. So they're supposed to be recession proof. So money goes out of the growth stocks, The companies that don't really make much money with rising interest rates, those companies usually get hurt because they lose access to easy money. And they pour it into the recession-proof stocks like utilities, telecom, the medical stocks, I don't know, food and beverage, that kind of stuff. ZYME triggered on Thursday as a breakout, not late at all. In fact, it has a 1, 2, 3. ZYME is a software stock. That's normally not what you want to do in a bearish market, but the bullishness on it is undeniable. It is really nice and bullish on a software company. It's weird. I like also the monthly on it, not bad. It reminds me of the TMUS before the TMUS popped. Here's TMUS, here's Zendesk. And then here's the weekly. Looks good all around. There is that resistance area above, which is like an eyesore to be buying it over here, knowing that there's resistance just 10, 12 bucks above. But I'm hoping it gets to 150 or so. So I like it. Needs to take out 128. Stop 119.50. Okay, under 119.50. Those are the longs. On to the shorts now. We got AXL, which has a weekly 1, 2, 3. So under that bar's low, stop above it. 663 by 720. Bird, let me see. Oh, the BRDS is the one that's an open position in the newsletter. It's doing well. Mentioned it last week, and I mentioned it the week before. We did 2 entries on it. So it's doing pretty well. I mentioned it on the weekly 1, 2, 3, but over here. So actually 3 weeks ago. And then it's been doing pretty well. Now bird, just one bird rather than birds. It looks good. I guess that's not my favorite because we have the support below. But look at that amazing breakout failure right here. Tried to go higher. In fact, it did it twice. But the second time was better because the breakout bar was met or rejected by a big red bar. So that was better. Okay. So I like it as a short, but we have that support below. So it's not my favorite just yet. CFLT is an amazing weekly sell setup plus a doji bar. Holy cow. I love this one. I like it short under 37.50. Stop over 41.75. Target the prior low. Love it. On the weekly. DB, not as much. I don't like it as much. But that doesn't mean it's bad. I like it under the base. Stop above. Tight stop. And target about $10.50. $10.50. Okay. On the DB. DCT. This one got me, I believe. As a short over here. And then I killed it. And then I believe I killed it like, I don't know which day. Maybe this day and then whatever. But it went back up, got out of it, and now it got slammed. So I like it as a replay. Short under the base. Stop above it. Okay, DCT. Check out DELL. Holy cow. Look how weak DELL is. Very weak and has a tight base. We always want to have tight bases because the tighter base is, the tighter the stop is. And then the higher the reward to risk. And usually when something is tight, that's when it breaks down and breaks out, that's when it leads to a nice sustainable move. Not just a little drop and then a pop. No, it usually follows through. So you get nice follow through when it's a tight base. So I like it under the base, stop above it. Okay? So I like the DELL a lot. HYZN, love the daily. To tell you the truth, I tried it long right here and then obviously it failed, didn't work, stopped me out. And but notice how, this is weak. I mean, this is broke down and now looks poised for another breakdown right here, short. Here it is on the hourly chart. That looks good. Under the base, stop above it, and then target the prior low right about 386, $4 or so. So I like it. HYZN doesn't have the highest reward to risk, but it looks good still. IONQ, it triggered on Friday already. So, but let's see if the weekly is a 1, 2, 3. I don't think it is. It isn't. But notice how bearish it looks. Looks really bearish. IONQ. Short maybe under Friday's low. Stop above Thursday's high. When I say Friday, my bad. It's Thursday since Friday was a holiday. I mean, the market was closed. Yeah, that was yesterday. So I meant Thursday. So that's Thursday, and the entry would be under it. Stop would be above Wednesday's high, okay? KOD is a base breakdown. Like it, not bad at all. Under the base, 680, stop over about 750, 740. So it's about a 60-cent stop. NVAX is a base breakdown. Not my favorite yet, but if the 20 MA catches up, then it would be really good. Look at the NVAX, guys, during the pandemic. I mean, just look at this crazy chart. It was basing at $3, 350, right? Basically, I don't know, about to go bankrupt. And then the pandemic happened, and it went from 350 or so to 350, 330, in just about a year, almost about a year, just maybe a little bit over a year. 1,000%. I'm sorry, 1,000? Did I say 1,000? 10,000. From $3 to $30 would be 1,000. From 3 to from 3 to 300, that's 10 times that. I mean, that's crazy stuff. And back down to 58. And to tell you the truth, it looks all the way down. It looks lower all the way down to maybe $16 or so. So I like it. Still looks lower. Plug, amazing weekly sell setup on the plug. Like it. Plus 1, 2, 3. So short under this bar's low, stop above it under 25.34, stop over 27.50. So it's a little bit big, $2.20 or so, but looks really good. I like it. SAVA, I don't know of a more bearish chart. I mean, more bearish weekly. I wish the 200 MA wasn't there. I wish it wasn't in the way, but the SAVA, I don't think there's anything that's gonna save it. Looks lower, 1, 2, 3, short, stop, and then target. So it has good reward to risk. Okay, like it a lot. SAVA, very wild stock. SMFR, that's a weekly base breakdown, but let's go back to the daily. Daily also is a base breakdown. Notice how it tried to go higher right here and failed. So under the base short, stop above it. Okay. Now, what are the numbers? Just, you know, do the math yourself, or like go to the chart and figure out what the lowest point is, and the entry for me would be just below it. If it's around a whole number or half number, I always put it at least a penny below. So at 249 rather than 251 or 252. Does that make sense? Always. A Square, I didn't think 3 weeks ago, I didn't think I'd be saying Square short, because Square had one of the biggest bottoming tails you're ever gonna see, and it's not producing any follow-through. 2 of them, no follow-through, pretty much. And now has a weekly sell setup plus a 1, 2, 3. So short under the SPAR's low, which is 118.92, stop over 131. Target maybe 192.93. Okay, on Square. VRT, I don't remember what it. VRT is a weekly sell setup, triggered already. Let's take a look at the daily chart. Daily looks good, that's why I like it, I guess. Daily short right here, stop up here, and target the prior low. Should have 2 to 1 reward to risk. That's pretty good. And Wix I was in it long, but I trailed out at the top, which is good. I got lucky. I didn't get lucky. I just saw that the market was turning. This day in Wix was when the market put in that big red bar at the top, and it was also at the declining 20 on the weekly chart. So it's not that I got lucky. I just had a good exit. But sometimes, you know, we exit and then the stock continues higher. But in this case, that was a good exit and it continued lower. And now look at the amazing downtrend on it. So it has a weekly 1, 2, 3, just like Square, just like the SQ. Which of the two do I like more? Square or Wix? Feel free to put it in to give me your answer in the comments, and I'll be sure to respond. Which of the two looks better? SQ, which also is a sell setup, plus a 1, 2, 3, versus Wix. You tell me, and I'll let you know once I read the comments. And then last but not least is the ZYME. Is just all out bearish, basing at the lows. Let's take a look at the daily chart real quick. Okay, the ZYME on the daily chart has that breakout failure, just like the bird had a breakout failure. Now, if it tried to pop on Thursday, got rejected. So now, if it breaks under the lows, it will have almost had 2 breakout failures. This one right here, minor one, and then the initial one, which was pretty significant. So I like it. Looks good. I'm not going to play every single one, obviously, but I've picked several to tell you the truth, and a couple of longs, and I've already completed the newsletter, the Strategic Swing Trader newsletter, which you can access from your T3 Live account, or if you'd rather wait until Monday, it should hit your inbox by about 8 a.m. on Monday morning. So either way, do whatever you want, but the newsletter is already completed. Thank you so much for sticking around until the end. Hope you enjoyed today's video. Let me know if you have any questions, and best of luck with your trading next week. Take care, everybody. Ciao.